We detected 3,000 unusual options on Carter's stock, ticker symbol CRI. Today, July 10, it is now 2:37 p.m. And this unusual options activity happened at 1:27 p.m. about an hour ago. So make sure to subscribe and hit the bell icon if you want to be notified and updated whenever we detect unusual options activity. So in this video, we're going to try to find out what is going to happen to Carter's stock price based on these unusual options that was done for the August 18 expiration date, 70 strike puts. So let's get right to it. We can take a look at the chain. You can take a look at the August 18s. You'll see here, these 70 strikes are here. And you'll notice that the open interest is only 4 and the volume is 3,125, which means that since the volume is greater than the open interest, these are opening trades and not closing trades. Okay, we believe they are buying these 70 strike puts, and when you analyze this, you'll see that this is very bearish. Carter is at $71. As the price goes down on the x-axis, this profit loss increases because this is a short position, a bearish position. There'll be more profits when the price drops. And that's why the curve is going to be above this zero profit loss on the y-axis. But if Carter goes up, this will become a loss. These put options will be a loss since it's below this zero line. When you take a look at the chart, you'll see that Carter's is pulling back after a recent high on July 3rd here, right? Notice that it has been going down for the past 4 trading days here. And if we pull a Fibonacci, it actually looks like it is right at the 38.2% golden ratio. So keep that in mind. There is some potential, if you believe in technical analysis, that this could bounce up, right? But if you believe in unusual options like we do, then you have more of a conviction that Carter's will go down. And also keep in mind, earnings is coming up. That's July 28. Okay, so these options, since they expire in August, this means that these options could also be something related to an earnings surprise here. Okay. All right, and when we take a look also at the value of this trade, we always want to look at the value. $255 per contract. That is approximately $765,000 here. Okay, so a large investor took a bearish short position, potentially a hedge as well if they have stocks already and they're using put options to hedge. And so this is something concerning, something to be aware of. And so that is something we wanted everybody to know, that Carter's had these 3,000 unusual options today, July 10. All right. So comment below. What do you think is going to happen to Carter's? Will it drop below that 70 strike price? Because when you analyze this, you'll see that this becomes profitable As soon as it starts dropping, it'll become profitable. However, at expiration August 18, it'll have to be below this price level, $66, because this will actually decay through time, -4 theta decay here. So it actually has to go below 70, but at expiration, but it could start dropping sooner, and then it would follow this purple line. You'll see that the purple line starts to become that blue line as we extend the time closer and closer to the expiration on August 18. Okay, and so that's how this profit loss diagram works. Okay, so about $67 at expiration date, right? And if we take a look at the $67 mark, it's right over here, right, at expiration date, which would then be, after earnings now, because that's earnings here. It'll be somewhere in August 18 here. All right. So the expectation is there's going to be a move on Carter's towards the downside pretty soon. If it doesn't happen, then it may not happen. Or the other scenario is this is an earnings hedge, all right, or an earnings surprise, where somebody knows something and they think Carter's is going to go down. And so comment below, what do you think? Do you think Carter's is going to crash the stock? Something going to happen? Comment below.